Imagine this. A year where Bitcoin doesn't just, smash price records, but it also fundamentally transforms its political standing, sees landmark legislation actually pass, and yet, somehow, a major bill, one that was actually called a big beautiful bill, which could have been a total game changer for crypto tax reform, well, it ends up leaving crypto out entirely. Sounds like a complete contradiction, doesn't it? Today, we're doing deep dive to really unpack this incredible, almost paradoxical story of Bitcoin's journey through 2024 and 2025. We've got a stack of your sources here: official legislative summaries, detailed market analyses, some pretty in-depth policy reports. Our mission really is to dig into how, despite that, let's call it a significant missed opportunity with the One Big Beautiful Bill Act, how this period still marked a fundamental, truly transformative shift for crypto's relationship with U.S. policy and, of course, its market path. So yeah, how could such a politically huge year for Bitcoin also contain such a glaring missed opportunity? Okay, let's get into it. Let's start right there, at the heart of this paradox. The Big Beautiful Bill. Officially, it's the One Big Beautiful Bill Act, or OBBB as some call it. This was a massive $3.3 trillion budget reconciliation bill. It actually passed into law July 2025. Now, you might think, given Bitcoin's absolutely explosive year, that crypto would have been, front and center, a headline item. But here's where it gets really interesting and maybe a bit frustrating for folks in the industry.
Indeed. And what's particularly striking looking at the sources is that the bill's biggest crypto story was, well, precisely what it didn't include. We saw Senator Cynthia Lummis from Wyoming make a really concerted effort, a very visible push to get comprehensive crypto tax provisions inserted. But ultimately, those amendments just didn't make it into the final legislation. And these weren't small changes either. We're talking substantial stuff. Like, imagine being able to use crypto for small, everyday things without sweating the capital gains tax. That's what our proposed de minimis exemption was, about waiving taxes on transactions under $300 with an annual cap around $5,000.
Right, that would make a difference for actual usage.
Exactly. And there was also a crucial fix for double taxation, specifically targeting how staking and mining rewards are taxed when you receive and sell them. Plus, more flexibility for companies using mark-to-market accounting for their crypto gains. And, critically, clarification on crypto lending. That's a huge piece of DeFi, decentralized finance, sorting out the tax treatment there. Oh, and also new wash sale rules, to prevent certain crypto tax laws harvesting strategies.
So, okay, these were clearly significant proposals, the kind of thing the crypto industry, through groups like the Bitcoin Policy Institute and the Digital Chamber, had really lobbied hard for. So why? Why did they fail to pass in the end? Was it like actual opposition to the ideas or something else?
That's the key question, right? And the sources seem pretty clear on this. It was primarily down to timing constraints, specifically during the Senate's somewhat chaotic votorama process. Basically, Republican leadership prioritized other provisions in that tight window.
Ah, so less of a rejection and more of a procedural issue.
Exactly. It wasn't necessarily a no on the substance of crypto reform itself, but more of a procedural bottleneck. And as our sources suggest, this was understandably a major disappointment for the industry. A real missed connection, you could say.
Okay, so that's the miss. But what was happening at the same time that painted this starkly different, almost contradictory picture of where Bitcoin stood politically? Because, yeah, while the Big Beautiful Bill might have been a missed opportunity on the tax front, Bitcoin was simultaneously going through its most dramatic political and market transformation ever. I mean, we saw Bitcoin break through $100,000, first time ever, December 5th, 2024. Then it hit an all-time high, $111,970 in early 2025. That's what, over 120% growth during that year? Just incredible.
That's absolutely right. And if you put this into the broader context, this unprecedented link, this correlation between political outcomes and Bitcoin's price, it really marked a fundamental shift. For instance, right after the presidential election results came in, Bitcoin surged, really surged, 60%, from around $69,500 on election day to over $100,000 by late November.
Wow, a 60% jump tied to an election outcome. That's direct.
And what's truly astonishing here is the complete U-turn of a key political figure, someone who, back in 2021, had actually called crypto a scam. Remember that?
Oh, yeah, I remember that.
By 2024, 2025, the then future president emerges as, arguably, Bitcoin's most powerful political ally, promising to make America the crypto capital of the world, even setting up a strategic Bitcoin reserve via executive order. Now, this pivot wasn't just random. Our sources suggest it was driven by recognizing a growing voter base and, the economic potential here. This shift became a core driver for the market, signaling a total change in the political winds for crypto.
Okay, so the Big Beautiful Bill was a specific miss on tax, but clearly not indicative of the overall direction. These other wins you mentioned really highlight that while one door may be closed temporarily, several others were swinging wide open, which makes our initial paradox even more intriguing. This period saw other breakthrough crypto legislation that fundamentally changed the whole regulatory landscape.
Indeed. And these laws, these proposals, they really signify a strategic victory for the industry, bringing much-needed clarity. Take the Genius Act. That's a big one. It was a monumental step, really. Became the first major crypto bill to pass the Senate, and with bipartisan support too, 6830, back in June 2025. It's focused on stablecoin regulation. Sets up comprehensive federal oversight for that, $238 billion stablecoin market, mandating one-to-one reserve backing, monthly public disclosures. Think about the stability and sort of trust that brings to a huge chunk of the crypto world.
Right, clarity for stablecoins is massive.
Then you've got the Clarity Act. This one advanced through House committees. And its goal is to provide the most comprehensive framework yet for dividing up crypto oversight between the SEC and the CFTC. Drawing clear lines.
Always a big question. Who regulates what?
Exactly. And crucially, it also aims to protect DeFi protocols, these decentralized finance services running on blockchains, no banks involved from being regulated like traditional securities. And while it hadn't passed yet, the Bitcoin Act proposal, well, it gained serious momentum after the election win and those executive actions. Proposing a strategic Bitcoin reserve, directing the Treasury to actually buy 1 million Bitcoin over 5 years.
1 million Bitcoin for a national reserve. That's ambitious.
Very. Shows the level of official embrace being discussed.
It's just so clear that these political developments weren't just like happening in the background. They were directly hitting the market in really profound ways. What are some of the most striking examples you found where policy and market moves were just, totally intertwined?
Oh, the connection became undeniable. Really direct. Think about the Bitcoin ETF approval, January 2024. Okay, sure, Bitcoin dipped a bit right after, below $40,000. Sell the news, maybe? But then, it quickly recovered, shot past $73,000 by March. And this wasn't just price. It fundamentally opened the gates to, $44 trillion in U.S. wealth management assets. Huge signal of mainstream acceptance.
Right, access is key.
And beyond that, specific key political appointments seem to directly fuel rallies. The nomination of Paul Atkins, known to be crypto-friendly, as SEC chair replacing Gary Gensler, and David Sachs as a sort of crypto czar. These announcements coincided almost exactly with Bitcoin breaking above $100,000.
That's pretty telling timing.
It signaled a massive shift, right? Away from Gensler's enforcement-heavy approach towards policies seen as more innovation-friendly. And look, it's not just retail hype driving this anymore. Professional investors, institutions, they now hold $27.4 billion in Bitcoin ETF assets.
Yeah.
You have MicroStrategy becoming the biggest corporate holder, over 1 million Bitcoin, and 61 publicly listed companies adopting Bitcoin treasury strategies. That's a deep institutional hug, not just tentative interest.
So beyond Congress passing laws, the actual regulatory agencies, the ones doing the day-to-day oversight, they underwent pretty significant transformations themselves, philosophically even.
Right.
What did your research show about how quickly these, sometimes slow-moving bodies adapted?
It's actually quite astonishing how quickly some things changed. The SEC, for example.
Yeah.
Under Paul Atkins, who took over from Gary Gensler on January 20, 2025, it was a complete philosophical shift. The new SEC, quite notably, dropped major enforcement actions that had been hanging over companies like Ripple, Coinbase, Robinhood.
We'll just drop them.
Yeah. And it set up a dedicated crypto task force, specifically to develop comprehensive regulatory frameworks, not just react with enforcement. Policy-wise, they rescinded SID 121. That was the rule that made it really hard, capital-intensive, for banks to hold crypto by requiring it on their balance sheets. They also started providing clearer guidance on things like staking, meme coins. So basically a move away from what people called regulation by enforcement towards proactive rulemaking, actually talking with the industry. Meanwhile, the CFTC, it was gearing up for potentially expanded authority under that Clarity Act we mentioned. Brian Quintens was nominated as chairman. Plans were being made for more oversight of digital commodity spot markets.
And this wasn't just happening in D.C., was it? Feels like this momentum spread out. What were you seeing at the state level or even internationally?
That's absolutely right. And it really highlighted this competitive dynamic emerging. Texas, for instance, became the first state to actually establish its own strategic Bitcoin reserve. Governor Greg Abbott signed that into law June 2025. That shows states wanting to lead right on.
State-level competition. Interesting.
Yeah, and you also had 18 states filing lawsuits challenging the SEC's authority over digital asset trading platforms, reflecting kind of growing state pushback against perceived federal overreach. And then on the global stage, you had the EU's big crypto framework, MiCA, Markets in Crypto Assets, becoming fully effective in January 2025. Plus, places like Hong Kong, Singapore, the UAE, all advancing their own crypto-friendly regulations. So it wasn't just a U.S. story. It really became a global race for crypto leadership.
So, okay, let's try and wrap this up. What does this all mean for you, the listener, and I guess for the future trajectory of Bitcoin? The big, beautiful bill, yeah, it might have missed its moment for those specific crypto tax reforms we talked about, but this deep dive into your sources, it really shows a much bigger, much more profound story unfolding. It makes that initial paradox even more compelling, actually.
Yeah, if you zoom out and look at the bigger picture, the failure to get those specific crypto provisions into the OBBBA, well, you could see it as maybe a tactical defeat, right? A single battle lost. But it happened within the context of a much broader strategic victory for the crypto industry overall during that period. The political transformation of 2024-2025, it established really unprecedented regulatory clarity and genuine government support, or at least openness, for digital assets.
Yeah, from that huge presidential pivot we discussed to proposals for national Bitcoin reserves, actual comprehensive stablecoin regulation passing the Senate, and that complete philosophical shift at the SEC. The industry achieved a level of maybe regulatory legitimacy that really positions it for continued, pretty robust growth.
Your sources suggest the legislative priorities are still ambitious moving forward too, right? Expected House passage of Genius, maybe the Bitcoin Act advancing. This whole period just demonstrated pretty definitively, I think, that regulatory clarity and government support have become primary drivers of Bitcoin's price. Not just tech, not just hype.
Exactly. It really marks a new era. Politics and policy are now just as important, maybe sometimes more important than technological advancements for Bitcoin's path forward. So here's something to think about, maybe mull over after this. If the absence of specific crypto tax reforms in one admittedly huge bill, if that could be so profoundly overshadowed by such widespread political transformation, by institutional adoption, by regulatory clarity elsewhere, what does that tell you about the real power dynamics shaping these emerging technologies? And how might future missed opportunities, in whatever form they take, maybe just pave the way for even bigger, perhaps unexpected breakthroughs down the line?